Hello again and welcome to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. My name is Randy Cook and I'm here each week with Charisse as we talk through some of the issues of retirement. Hopefully we can answer some of your questions. And if you have concerns and you don't have that person in your life yet who's going to help you kind of navigate through retirement and what this is all about, that's why we have this show to introduce you to Charisse. How are you doing today? It's summertime.
It's great. I got a great tan, Randy.
Yes, you do. Every summer you do. You're one of those people that gets deep tan. Now, others of us burn. You tan. Okay.
I know. It's super tan city during the summer for me. I actually have to wear long sleeve shirts and stuff because I get too tan, right?
Okay.
And the ladies, as you're listening, as we get older, we got to protect our faces. So
there you go.
I try to be very cautious there. But it's Father's Day weekend.
Yes, it is.
I know.
Yes. If Dad is still around, make sure you're spending some time there. If not, nice thoughts about Dad. And as a matter of fact, your dad actually, named Zinnia Wealth because he was in the landscaping business and all about the flowers. And that's kind of where this all came from, didn't it?
I know. My dad was amazing. He's passed away. He had cancer in 2019, unfortunately. And I just remember when I started the business, I talked to him about stuff. He was such a visionary and he was so creative. And I just even remember when I was in college, if I had to write a thesis, I would get stuck. I'd be like, Dad, I'm stuck. I just need 2 sentences. Get me out of this loop. And he'd give me those 2 sentences. I'm like, all right, bye, Dad. And it was funny. Fast forward, starting the business. And then, 10 years into the business, I wanted to change the name to Zinnia Wealth Management. Well, I didn't know what it was. I just wanted to change the name. Mm-hmm. And I worked with a couple of marketing companies for a year and I could not settle on what I wanted to do with the name. So one morning I just called him. I was having my coffee, looking out the window on a Saturday, and he lived in the Keys and I know exactly where he was sitting. I was like, all right, Dad, I'm stuck once again as an adult and I need help. And you know what he said? He's like, you're naming your company all the wrong things. He's like, why don't you do me a favor? Because he owned a landscape nursery in the Keys. Why don't you Google flowers? I'm like, flowers? All right. I Googled flowers and Zinnia popped up. I went, oh my gosh, that's a pretty neat name. That's female-ish. It's kind of masculine. And he told me the whole story about zinnias and how they really groom and weed themselves. And Charisse, I know you're a green thumb. So, he wouldn't say Charisse. He always said Reese, by the way. I have a nickname named Reese. I don't know if you guys know that. He'd say Reese or Reese. And he would just say, you should plant some of those in your yard. And you would actually have a really pretty yard. Because I was terrible.
But you also explained to me that zinnias come in all different shapes and fashions and colors and things like that. And that kind of goes along with the idea that we're going to build a portfolio for you that's unique and it's different and it's different from everybody else. So it really does fit.
It really does. And he's like, it was a cool start and we just took off from there. So he was always so amazing, but so many great memories. He is also the reason why I donate and give so much to so many charities. He had a heart when we were at our poorest, right? Fishing under the bridge for food. And he would say, we're going to raise money for the cat lady, or we're going to raise money for these kids who need a Christmas tree. And I'm like, we need a Christmas tree. Mm-hmm. Mm-hmm. But I just learned that it wasn't about us. It was always about other people. And so that's kind of how I live my life.
Well, we do that every day here on the show, and this is what Charisse's mission is to help you in your retirement years, not just, getting ready for retirement, but walking through it with you. And we've got some stories about that today, and we also have a fun Father's Day story for you coming up a little bit later on. But Charisse, we're going to start today with one of the big questions we always talk about. When you go in to sit down with a financial advisor, you should know when you walk out what your paycheck is going to be in retirement and where it's coming from. And Investopedia's got an interesting list here. These are the places where people get their income from. How do you get paid in retirement? It comes from these places. 30% on average come from Social Security. We probably know that. This was surprising to me. 27% comes from earnings. So people doing part-time work. So they're still working in retirement a little bit here. 23% come from either savings or pensions, which are disappearing. This is what I want to dive into here. 12% of income for retirees comes from their assets making money. So your money making money. Now, when I look at that in the shape of a pie, only 12% here is your money making money. Charisse, that seems like a really low number from me. What do you say to that? When you put together a portfolio, is there more set aside to make money for you?
Yes. I don't even understand this number.
More than 12, huh? Okay.
Yeah. I mean, let's put some math together. If you have $1 million, that's more than 12%, right?
Well, if you had $1 million, that means $120,000 of that money is making you money. Okay.
I know. Okay. I'm going to make sure I got this right. Yeah. That's insanity. And so most people who come into our office, they have, $500 to, $4 million, $5 million. And to say, hey, we're only going to invest, 12%, they would walk right out the front door. So most people invest all of their money minus maybe 10%. I mean, the hard, fast rule is keep 5 to 10% of your total dollars that are investable assets liquid, like cash equivalents, CDs, money markets, or savings accounts, and the rest gets invested. So if you are only investing 12% of your money, which is an insane number to me, that means you're ultra conservative, and you're going to lose to the inflation game. And depending on what you spend, you're risking running out of money. I mean, that's a big one. So what I'm curious about is most of our clients pull a heavy amount from their assets. So if we only invested 12% of their assets and we're pulling out 4%, we're going backwards.
Yeah.
Because we need all that money invested. It doesn't all have to be risky, right? But if we're looking for an income source, if you get Social Security, let's say you need $80,000 in income in retirement, and between you and your wife or you and your husband, you are pulling in $40,000 in Social Security.
Okay.
But we have a gap. We need another $40,000, right? And so let's say you save, let's say a simple number, $1 million. Well, 4% of $1 million is $40,000. But if you only had 12% of that invested, you'd run out of money in short order. Yeah. So you want to make sure your money is invested. If you're a risk taker, that's okay. We just need to know where you're pulling your money from and that really dialed in withdrawal strategy. And if you're super conservative, it's the same thing. You don't have to have all your money in CDs. You don't have to have all your money in annuities. You don't have to have all your money under the mattress. Let's do some mattress money if you want that. Let's do some CDs. Let's do some money markets. Let's do some fixed income funds that are actually working well right now, because those have a very low standard deviation, which is that wobble jiggle effect, right? If you're ultra conservative, and split it up. So a conservative person, Randy, can actually be very diversified in their income plan in the safe money strategies if they didn't want the risky side of it. So it's really just doing the math, coming up with a plan, and understanding what your options are. But unfortunately, when you go to a big bank or brokerage firm, your option is 60-40 cash CD, and that's it. And that's not a plan, unfortunately. And so we get very creative here at Zinnia Wealth.
Well, I think that what I really got out of that is that you can invest a lot of your money, but it doesn't have to be invested at risk or in heavy risk. There are different levels of risk in investing. And these are the things you can sit down and talk to Charisse about. You may be very conservative and say, I don't like that stock market. That's okay. There are other places to put your money with less risk than that up and down of the stock market. Let's talk through that. Give Charisse a call and get a date on a calendar. If you go to the website, you're going to see a gold box there. Go to zinniawealth.com. Gold box says complimentary retirement consultation. What's that? That's just us getting together and talking through all of this and just saying what's got you concerned, what's got you bugged, what's got you worried, what do you want to do in retirement? Let's have that conversation. 833-368-3680. Again, 833-368-3680 or zinniawealth.com. Okay, in the early 80s, there was a study done where they asked people, rate your driving skills. Are you a good driver? 93% of people said that they were above average drivers. That is mathematically impossible. It just can't happen. Right. 93% of you cannot be above average, okay? All right. Now, not long after that, there was a study done asking people on how they rated their skills in planning for retirement. 67% of people said, yep, I'm good on my own. Sometimes perception is not reality, okay? Yeah. Sometimes we overestimate how well we can do at something. So I want to address the people who are listening today who are doing this all themselves. You're do-it-yourselfers. That's fine. A lot of information out there, and some of you can do it. But Charisse, if you sit down with somebody who's going, I've been doing this myself, I just want to kind of check the checker here. Can you run this? What is it that you see that sometimes the DIYers forget, or they get wrong, or their eyes get big and go, never thought of that one, Charisse. Okay, talk to me more. What is it?
Number one, it is taxes. DIYers totally forget the tax plan. And they also don't pay attention on the withdrawal strategy, because a lot of the DIYers, they have a Vanguard fund and then they have a cash fund. And that is it. Okay. So when the markets crash and burn, there's no plan. And when they need cash, there's never enough cash because they're waiting on the sidelines to invest it, and they might have invested it. And I always see a problem there. And that's when they start to come to us, when they realize, hey, I missed the boat here. Or, hey, I needed income and I had to take withdrawals when the market went down. But the taxes are key, like clockwork. Because a lot of the DIYers that come in here, they're very smart, right? They're astute. Yeah. They've been following the market forever. They start to come in because they just want to double check. Like, do I have it all together? And when they turn about 70, they come in at 75. They're like, just manage my money, Charisse. It's like how it always works. I'm done. But when it comes to the tax plan, they're like, Charisse, we know nothing about the tax plan. I had somebody who came in, a couple weeks ago, and they had $2 million in IRAs, and they could have been rolling over dollars like the last 6 years, but they never did because they just weren't paying attention. They didn't know what the value was. And they did go in and see another advisor asking about the tax plan and how they can help them. They were a deer in the headlights. Like, we don't do taxes. You got to go to the CPA. And then they went to their CPA, and the CPA is like, I just do the bookkeeping. I don't do your tax plan. So it's a vicious cycle in the financial services industry, because most advisors don't focus on not only just the bookkeeping and working with our CPAs, but also the tax plan and showing them in real dialed in software. Hey, if you roll $10,000 a year for the next 10 years, $20,000, $100,000, I have clients rolling $200,000 a year for so many years. What does it bring to your household in 10, 20, and 30 years? How much do you pay in taxes? How much do you save in taxes? How much more do your heirs that inherit this money pay in taxes, or do they pay no taxes? So people just want to see that, and most advisors just can't give that answer. And so those DIYers love coming in, because that's when they start working with us. They're like, oh, this is good, because we're putting hundreds of thousands, sometimes millions of dollars back in their pockets with the tax plan. And they're always so shocked, because math does not lie. So it's really important to understand that.
Well, I found a story this week. We'll probably dive into it a little bit more next week, but here's the stat. 70% of retirement plans that fail, that failure can be traced to a misstep in the first 5 years of retirement. So you get into retirement and you're going along and things are going fine. And then about 3, 4, 5 years in, you go, wow, I'm spending a lot more money than I thought. Or I didn't think that this was going to happen. Or what is an RMD? And this is where I think it's so important to sit down with Charisse. I know that this show is designed for people getting ready for retirement to sit down and build a plan. But if you're in retirement and you're in those first 5 years and you're just kind of tiptoeing in and you're trying to figure out as you go, and then all of a sudden you start to see that balance go down and you start to panic a little bit, come on in. Come to see Charisse and let's see what's going on. Okay, let's get you that income plan that you need, that's going to make you feel confident that the money's going to be there for you, not for the next 5 years, but for the next 20, 25 years. Give Charisse a call. Here's the number, 833-368-3680. Let's do that second set of eyes for you. 833-368-3680. It's a no-cost, no-obligation look at your retirement, or use the website, zinniawealth.com. Click on the gold box, and you'll be on your way. Charisse, that is all the time that we have on this one. I will give you the last word.
Well, as usual, live by design and not by default. And we'll see you here next week.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.